By now, we're halfway through the financial year and you would have gone along to see your accountant or considering putting your records together for the accountant. One of the things we do as part of our profession is get concerned about certain aspects that clients do that really sort of annoys us in our professional capacity. Today I'm looking at the 5 top things that annoy me, and I should note by way of disclaimer, these are my top 5, not every other accountant's top 5. So the first one, the big no-no for me, voiding invoices. Now, when you issue an invoice, you can often make an error on it, and so you want to go and correct it. It seems with accounting packages nowadays, it's very simple, go in, void it, and that's it, problem solved. Possibly even editing the invoice would also be something to consider. The problem is once the invoice has been issued and sent to the client or customer, it can no longer be amended or voided. Instead, you should issue a credit note against that original invoice and issue a new invoice to be correct. As an example, I sent an invoice for $1,000 to a client. That client turns around and says there's an error. I then send a subsequent $2,000 invoice to the client, which was the correct amount. I should technically credit note off the first $1,000, leaving the $2,000 invoice outstanding. Now that might seem a little bit at odds with the practical aspect, just tear the first invoice up. The problem is both those invoices are legitimate invoices. And so therefore the client or customer has the right to claim back the expenses of those 2 invoices. And that can create a disconnect within the tax system. So void invoices, a no-no, issue credit notes instead. One of the other ones as we come to the middle of the year, car companies are really good at starting to get rid of all their surplus stock, waiting for the new arrivals to come in, and everyone likes a sort of new car as spring is in the air. The problem you have with that, of course, is that when you go along to look at these deals, a lot of them are geared up for the individual consumer rather than a commercial contract. So you enter into the agreement, you get some really good favourable deals going on, sign everything, and then once you own the car, you transfer it into the company name. Of course, the question that then arises is you claim back the GST and all the running costs of it. But alas, you can't. The reason for that is the car has not transferred from the personal name into the company name. Therefore, it is not a company car. You can claim back running expenses as a shareholder or employee, but they're not subject to GST because the recipient, employee or the shareholder, are not GST registered. Therefore, the simpler way is don't register cars in your personal name, register them in the company name, if you're going to be using them for company expenses. One of my big bugbears and my staff constantly complain about it is general expenses. Can't stand it. If you're going to throw things into general expenses, there are other better categories to use like office expenses, property expenses, repairs and maintenance, better classifications. General expenses should be tried to be avoided in my mind at all times because general is like the big slushy fund that sits there. What goes into it? What comes out of it? And so therefore look at classifications that are more aligned. For example, printing and stationery might be better called office expenses and some of those general expenses can go into it. So for my mind, no general expenses, better classification. Credit cards. Now, I've got a few and I have different reward points and loyalty points for each one of them. And I like using them to get my reward points. The problem with them is that when you have cards that are issued in personal names used for company expenses, you have a muddling around between what's for personal and what's not for personal. This can create some confusions, particularly if you're like me, not very good at keeping the old receipts that come out of the till. You then have to try and justify what you've spent on your personal credit card for your own household or personal spending versus that for company spending. The best thing to do is get a company credit card, treat it as the company credit card, have your personal credit card and treat it as your personal credit card. Don't merge the two. So the key thing for that is company credit cards for company expenses, not personal. Gift vouchers. We all love these, but they're effectively swapping cash for cash. In some strange way, a lot of clients have come up with the idea that gift cards are not really cash because they're given in a little form of plastic. And we all know that cash is a little bit of a no-no. You can't give $1,000 to a staff member in cash and say, well done, thanks very much. That should technically go through the remuneration and have tax paid off it. But there is times when you look at it and say, you know what, we want to reward and acknowledge the good efforts of our staff. And to suddenly give them a bonus that gets taxed up the wazoo makes really no benefit to them. And so we try to be creative in those ways, and often gift vouchers is the way of doing it. So off you go to the supermarket and you pick up a $200-300 voucher for the New World Pack and Save, Countdown, any one of those ones, and you give them as a thank you to your staff. Now, if you take the example of if that was given to a staff member and they were on the top tax rate, a $300 gift voucher from the supermarket is the equivalent of $450 pre-tax money. So in essence, the commissioners missed out on $150. That doesn't seem so bad, but you multiply that over 10 staff and multiply it over 12 months, and suddenly you have a larger complication that comes about for missing tax. So while gift vouchers are one of the bits on my top 5 list to be aware of, the thing about it is to give them as little as you can, and around Christmas time is fine, but outside of that, on a regular basis, it will be seen as remuneration. So if you're doing it regularly, no gift vouchers, run through the PAYE system. As I said, these are my top 5, but it's just things to consider when you're looking at your accounts. Talk to your accountant, ask them what their bugbears are, because I'm sure this will save a lot of reprocessing when they start to do your annual accounts.